Good evening, everyone. My name is Yogesh. Welcome to this webinar powered by Century Financial. And today's topic is decoding the cryptocurrencies. Now, I did one session about cryptos and blockchain that was in June. And then we decided that we'll do one session which will be completely on cryptocurrencies, where we will understand how many cryptocurrencies are available, how you do and buy and sell. And definitely we are going to go through this presentation. And we're going to learn a few strategies, because this is this is not one of those sessions where we sit and talk about buy cryptos and it's the future and everything. I mean, that is there, but we have to understand the risk behind these, how much money you can lose, and that's the most important part, because nobody minds the profit, but loss is something which is really important in an investment. And unless you really have the right kind of risk appetite, you have to calculate it for yourself. You have to talk to the financial consultants, you have to talk to your risk experts, and only then invest into cryptocurrencies or trade or speculate into cryptocurrencies. Before we begin this session, please, if you can give me a yes or a okay, you can use your chat option if you can hear me properly, if you can see my presentation. I just want to make sure that everybody can hear me properly. Just send me a chat like yes or a okay, so I'll be confident enough to go ahead with it, because there can be some network congestion related errors. We are recording this session, and a copy of this session will definitely be put on our website, and then you can access it as an on-demand webinar also. Now, as I said, to begin with, we talked about in our previous sessions about blockchains. Today, we are going to discuss more on the lines of the cryptocurrencies. And cryptocurrencies is something which has been a concept for a while. Yes, the popularity of cryptocurrencies has been always a question. Back in 2008, it was a buzzing concept, but then over a period of around 2012-13, we saw several things happening with cryptos. We'll go through a complete timeline of the Bitcoin, of the cryptocurrencies, when the altcoins came into the picture. Today, there are stable coins, and there are a lot more cryptos. I mean, around 7,000 cryptos are already available, and you don't know which one to buy or sell or what to do. So today we are going to discuss about few crypto related strategies. We are going to talk about what are different ways of investing crypto, because this is really important. Most of you just know one thing, that okay, I'm going to buy crypto and keep it and see what happens. And I'm going to give you different ideas of how you can do it. Now, to begin with, what a cryptocurrency is, as you can see in this presentation, type of currency that's digital and decentralized. So one thing which is the most important thing, it's a digital currency. We are talking about a virtual money which is encrypted with an algorithm that it is difficult to trace. So today, if I have to do a transfer in dollars, and if I convert the dollars into Bitcoins and send it to you as my receiver, the knowledge of the transaction is it's not to anyone else. It's the anonymity which has made cryptocurrencies one of the most important things. And again, this has worked in favor of cryptos, this has worked against cryptos, and that has been a complete question. We'll go through trend of cryptos in last 1 year, how it has been, the key important points, when the cryptos went up, when it come down, what was the reason behind it. Now, there are thousands of different cryptocurrencies available today. Most popular in the original is Bitcoin, which was created in 2009. And then there were different altcoins which came into the picture. So what you see right now, virtual money, which is digital, encrypted with an algorithm, so it's difficult to trace, with no financial institution involved. And then it is a decentralized network design. And when I say decentralized network design, this is something called, it's a new area of study, decentralized finance, or what we call as DeFi, where the very much authority of a particular transaction, or there is not one single body which is controlling the entire transaction or the recording of such transaction. It is very much decentralized. The control is spread to many of such users of the Bitcoin. So that is why this is something what we call as decentralized finance, where the very concentration of the power is not into few hands but spread worldwide, and that's what has made blockchain as a concept very famous. You can use your chat option to ask questions while we progress with this session, and I'll try to answer my best during the session, or once we end the session, we'll take 10-15 minutes to answer these questions as well. So definitely please use your chat option. I have a notepad with me. Please keep a diary or a notepad with you, so if there are any important points, you can note it down and ask me later, or in a one-on-one session later on. Now, once you know what a cryptocurrency is, let's understand what a Bitcoin. Again, Bitcoin is a cryptocurrency. It's a virtual currency. So if you want to buy any product using a Bitcoin, or if you want to buy any product or services and you are using Bitcoin for it, you can just transfer it and nobody will get to know. No financial institution gets involved. And that is the reason that why most of the government regulators, most of the central bankers, they have never made it official or legal until El Salvador, one of the countries, have done it, and we'll discuss about that also by the end. So the very important feature of Bitcoin is, one, it's digital. Second, the very anonymity, that nobody gets to know. There is no trace of when you do the transaction. Let's understand a little bit of the timeline of the cryptos. I'm sure there are many crypto enthusiasts here, and I'm sure you will have a lot of questions about different cryptos. I'm tracking a lot of cryptos, but then again, as I said, there can be a lot of cryptos which can be in your mind. So feel free to ask. There's a question: how can I buy cryptocurrencies and hold in my account? Definitely, I'll answer this question, and there are more than one or two ways of doing it, and I'm going to give you both the options here. Now, Bitcoin was created in 2008, and let's understand this. Bitcoin was it was a result of very angry and very pissed off people who lost their money in the financial crisis in 2008, because people got so angry that how the big financial institutions could play with their money, and they end up being bought out by different companies, and they were saved. But the ordinary investors, the retail investors, they lost a lot of money to all these collaterals and CDOs and whatever products were packaged by these financial institutions and were sold to the investors. So one of the people, they made a cryptocurrency, a digital currency, which will not involve any financial institution. That's why Bitcoin, or a cryptocurrency, was actually introduced in 2008. In 2009, we saw the first transaction which happened, where the founder of the Bitcoin, he sent 10 Bitcoins to Hal Finney, a computer scientist and an early adopter of Bitcoin. He was the first person to tweet about Bitcoin. Then back in 2010, we saw that Bitcoin actually jumped from $0 to 0.008, and by end of 2008 went to 0.8. Now that's a huge growth. 2011, we saw altcoins coming into the picture. So after the success of Bitcoin, Litecoin was launched, and it was the mere result of the Bitcoin's popularity, and it was used for online transactions between individuals with some of the e-commerce providers. Followed by back in 2012 and 13. So in 2012, we saw Bitcoin touching a high of $250. 2013, Bitcoin was around 1164, and so many people came on board, seeing the rise in the value of Bitcoin. And by the end of 2013, it was already above $1,000. 2014, biggest blunder, the very exchange, which was a Bitcoin exchange, the crypto exchange, Mt. Gox, got hacked, and Bitcoin fell down almost by 40 to 50%. And going further in 2015, fell down by another 50. And we saw from 1164 in 2013, it went down to $300. Why I'm telling this? Because there are a lot of youngsters right now who are watching this, and they should know that this is not a piece of cake. This is not something which you can just have in your account or exhaust your savings into it. This is an incredibly risky product. And before you exhaust your savings or your hard-earned money into it, you have to calculate the risk versus rewards. 2016, we saw Bitcoin moving up by 121%. It was a game changer. 2017, when Chicago Mercantile Exchange and Chicago Board Options Exchange in US decided to list Bitcoin as a future contract, we saw Bitcoin going to $20,000. There were a lot of retail investors which pushed positions into it. 2018, Bitcoin crashed again. 2019, it went up to $10,000 from 3,000, and then followed by 2020 when the pandemic happened. Now, a lot of things happened during the pandemic. SPAC, special purpose acquisition companies, the IPOs through SPAC jumped. Bitcoin investments, the institutions like Tesla, PayPal, MicroStrategy, all these big institutions. So what is difference? What is the difference between the Bitcoin rally of $20,000 in 2017 and the Bitcoin rally in 2020? In 2017, the retail investors, the people with small positions, but so many people with smaller positions, they entered into the market and which pushed the Bitcoin prices high. But in 2020, not only retail, but the institutional investors, the institutions who take big positions, massive positions, $1 billion positions in cryptos, they entered in the market. And institutions or corporates, they just don't buy one or two or 10 or 100 cryptos. They take higher positions. They buy blocks and blocks of such trades. That's why institutional investment is something which is determined by volumes, and a lot of trades are taken on the basis of that. So we saw in 2020 that Bitcoin went up by 224%. Then in 2021, when Elon Musk, the Tesla, announced the investment of $1.5 billion through a tweet, Bitcoin went to $50,000 in February. Now, in 2021, we saw Tesla again doing a tweet where it said that they will accept the Bitcoin. We saw in March 2021, Elon Musk tweeted that anyone can buy a Tesla car using Bitcoin, and it went to $64,000. What started with in year 2020 with 7,000 went to 64,000. And then in 2021, Elon Musk again tweeted that Tesla is not going to accept cryptos, especially Bitcoin, because the mining of the Bitcoin uses a lot of energy which comes from the non-renewable sources. And that's why Bitcoin prices crashed, because apparently it turned out to be a non-sustainable or not a very environment-friendly cryptocurrency. So Tesla said that we can accept any crypto which is more environment friendly, because that's what Tesla stands for. And we saw cryptos falling down. We saw Bitcoin prices falling from $60,000 to $30,000. Eventually, China banned the cryptocurrency trading, which impacted the crypto prices more. As of now, as we talk, the Bitcoin is priced around $34,000 to $35,000. It keeps changing from 64,000 in 2021 March to July 2021, already down by 50%. And that is how the cryptos have worked so far. Current news, which has been putting a lot of pressure on Bitcoin especially, has been about China banning the cryptocurrency, and obviously Bitcoin not being a very sustainable form of crypto. So we have seen the prices coming down all the way. But again, there is a lot of progress which keeps happening day on day, and we are going to see the live charts of these cryptos as well. Altcoins, as I said, after Bitcoin's popularity, we saw a lot of altcoins coming in, and Bitcoin has been a dominant cryptocurrency since the very inception of the industry, and that's why it is a premier crypto, the primary crypto. But now with Ethereum coming in, somehow we have seen a dilution in the market share of the cryptos, and a lot of altcoins are preceding over the market share. Now, these are, just so you know, a top 15 cryptocurrency by the market capitalization. And you can see that these are lined up. Again, Bitcoin being at the first, we are looking at Bitcoin, Ethereum, Tether, Binance Coin, Cardano, Ripple, Dogecoin, something which is, it is hilarious and yet amazing, because Dogecoin went up by 14, and let me say this right, from January till May, or I think till January to May, Dogecoin went up by 14,000%, which means if you had even put $1, that investment would be 14,000% higher in just 4 months. So, and the primary reason was, again, Elon Musk tweeting about Dogecoin and how it has become the favorite, and that is what pushed the Dogecoin prices higher. So that being said, again, there are a lot of things. Polkadot, Internet Computer, USD Coin, and we have seen again and again a lot of such cryptos. You see Chainlink, Uniswap, Polygon, Litecoin, and we are going to talk about all these cryptocurrencies, most of these cryptocurrencies, that why people are choosing them and how we can invest into these. Just 1 second. Perfect. Yeah. Now we are going to discuss about other cryptocurrencies and introducing you these stable coins. Now this is where things become interesting. Nobody knew more about stable coins before, because everybody talked about altcoins, cryptocurrencies. A lot of you know about bit. Okay, I think it's great if we can be more a bit more interactive. Please write on your chat. I mean, I'm sure there are so many attendees out there. Which is your favorite cryptocurrency, or the one which you're tracking right now? Go ahead, use your chat option and start writing which is the cryptocurrency you want to. I mean, even if it is as common as Bitcoin or any crypto which excites you or which you want to have information about, or which is your investment choice. Go ahead, guys. I'm getting a lot of answers here. Okay, perfect. Altcoins and Bitcoins. Okay, anything else? Go ahead, guys. This is something which we can always go ahead. Okay, perfect. Cardano, Ethereum, Bitcoin. Okay, more. Give me more. Come on. I'm sure there are a lot of people, around 40, 50 people right here. And I can see a lot of you have interest towards cryptos. Just take random names. I mean, whatever you have heard about. Because then eventually I'm going to tell you top 8 cryptos, what we are talking about these days. Investment choice other than Bitcoin. Definitely. I mean, it can be, we can have, so for those people who want to know any different investment choices, I mean, this is particularly a crypto webinar, but you can have a one-on-one session. And I can definitely tell you about different investment choices as well. But I'm going to talk about some ETFs. So stay here. Dogecoin, of course, Bitcoin, Ethereum, Ripple. So absolutely. So a lot of you are into it, and that's great. So we have taken some names and we are going to discuss about these. So far, nobody has talked about Tether or Bitcoin USD as in US dollar or any other stable coin. And I'm going to tell you what stable coins are. Because stable coin, this is a crypto, but it is, as the name suggests, it is stable. So basically, stable coins are pegged with fiat currencies. What are fiat currencies? Fiat currencies are like dollar, euro, pound, dirham, right? Again, write it down on the notebook if you can't remember. Stable coins, the word stable itself means that these cryptos, they are pegged to fiat currencies like dollar, pound. So they are pegged as, when I say pegged, that means if I say Tether is a stable coin, which means Tether is pegged to dollar. $1 is equal to 1 Tether. So Tether is basically a digital dollar with which you can exchange your cryptos. Okay, and I'll tell you the reason also that why a stable coin exists, because since it is pegged with dollar, so your specific question would be, if it is pegged with dollar, then why we are looking at it right now. Now, to begin with, why stable coins actually exist is because they are backed by either a fiat currency or by a commodity. Tether is one of the very popular stable coins, and it came to the market with both. I mean, the market capitalization of Tether is huge. A lot of investors, they adapted it, and it is pegged 1-to-1 to the US dollar. Again, to make it very simpler, when I say it is pegged 1-to-1 to the US dollar, that means if $1 is equal to 1 Tether, tomorrow, if the value of dollar changes, the value of Tether changes. So basically, you can have digital dollars in your crypto account. Now, because it is pegged 1-to-1 with US dollar, the solvency it relies upon the strength of its reserves, right? Which is around 3.8% of the cash. Now, there are a lot of such stable coins which are pegged or backed by US dollar. And these were launched in 2018. So it's very less talked about. but now it has started again getting some attention. It was launched in 2018, and again, these are stable coins, so which means there is some exchange. So normally we talked about decentralized finance, but stable coins are pretty much centralized, and they have a certain entity or exchange, especially in the case of Tether, because it is pegged by US dollar, right? And the only risk which you face in stable coins at the moment is that you need to have that central authority which is controlling everything. It should be trusting that they will continue to maintain the supply of dollars equal to the supply of the stable coins. And this is again, as I said, this is against the concept of decentralization, but because stable coin is pegged with a dollar, so there is some sort of centralized authority which is taking care of it. So it can be a third party. It can be a third party like Coinbase or Circle or any other crypto exchange which can control the supply of stable coins. Now I'm going to tell you the practicality of the stable coin, why stable coin would be needed. So as I said, there are different kinds of stable coins. There are fiat backed, there are commodity backed. Again, commodity backed, which, so any cryptocurrency which is backed by a commodity like gas or gold or valuable metals, for example. So this is again something which exists. And when I say commodity backed, that means any stable coin, when I say it is a commodity backed stable coin, that means they are backed by gold or oil, and they are very well known. Like there is Tether gold, there is Paxos gold, and there is a collateral behind those coins. So imagine, I mean, if gold value goes to zero, then you have a risk of losing money in this cryptocurrency. So there are some stable coins which are backed by the assets or commodities also. But since commodities should increase in value over the long run, investors can always buy and hold this asset for capital appreciation. So today you tell me, like for example, either you buy gold, but if you want to buy huge, and please hear me out, if you want to buy huge, large quantities of gold, then you have to pay money for the storage, security, a lot of things. If you could buy a crypto or a stable coin which is backed by the commodity, and if the value of the gold goes higher, then the value of that particular coin also appreciates. So that is the importance of a commodity backed stable coin, right? It helps you solve the idea for having bigger quantities, security, and storage. And like this, there are crypto backed stable coins, and this is something which goes on. Now, one more application of a stable coin, and I have to tell you this because I'm not sure how many of you are actually doing it. Tell me over your chat options what happens, and I'll give you a second one. What happens if you have bought any cryptocurrency, maybe Bitcoin, Ethereum, Litecoin, and today you get to know that there is a possibility that cryptos might crash. Okay, hear me out. You bought some cryptocurrencies and you started, you got news that there is a possibility that cryptos might crash and anything can happen. Now, when that news comes to you, what will you do? What will you do? Write on your chat that you got to know about cryptos, that something can happen to the cryptos portfolio, and you started thinking, what should I do to my portfolio? Because you are expecting cryptos to come down and you have all these buy positions. What you are going to do to protect yourself? Take a wild guess. Anything you would do, take it as a practical situation. If you have investments in Bitcoin right now and you get a news that Bitcoin is going to come down, what you're going to do? Come on, guys, chat options, use your chat options. I'm getting a lot of answers. I need answers from everyone. It's a practical situation, right? With me, everybody is a trader. Everybody is a consultant. So don't worry about being right or wrong. You need to take your own decision. Okay, I'm getting answers now. Sell now and buy after crash. Perfect. You sell it now, and if the market crash happens, you buy, right? That's one thing. Second, sell it. Okay, that's great. You can sell it. Sell out the remaining, sell the cryptos, hold it for a few days, talk to my advisor. Perfect. And there is one answer which is, yeah, now I'm getting the answers. convert them to BUSD or a stable coin, buy when low. So a lot of you, majority of you said that, okay, either we are going to sell it right now because it might crash in the future. Second, you said that sell out now, and if it comes down, we'll buy it again. Third, use a stop loss. Very, very impressed if you're putting a stop loss, because a lot of times investors just talk about it, they never do it. I'm very impressed if you're putting a stop loss. That means, as from a behavioral point of view, you're very, very good and very stable. And important, one of the important segments, hold for a few days. You can, or you can convert it into stable coins. So which means, because if you close your trade and withdraw your cash, taking money out and putting in, it takes time, and there's a transaction cost to it. So basically, every time you convert your currency from dollars to dirhams, or you transfer it again, there will be some cost, plus it takes time. To stop all that, all you can do is you can convert your bitcoins into a stable coin which is pegged with the dollar value, and wait, the right time comes in, and you can again convert your stable coins to the bitcoin. And it is that easy, and it is available right there on the exchange. So that is one way to protect, and that's why the stable coins exist, the primary reason. There are a lot of other reasons. See, with every technology can be used for positives and negatives. We are not going to highlight the negatives here, but normally what the positives are. Always buy. So there's a suggestion here: always buy when low, wait for bump and stop loss. Absolutely, you can. Convert to stable coin. So when I say convert to stable coin, a stable coin like Tether, which is pegged with dollar. So all I'm saying is, instead of closing your trade and taking money out or putting the cash over there, all you can do is convert the Bitcoin into stable coin, which is priced at that particular time, which is pegged with the dollar at that time. And once you want to enter into the position again, you convert into stable coins, right? So one question is, how do you profit from stable coin if it is fixed to dollar? So from a fiat backed stable coin, maybe not much, because the only profit you get from a fiat backed stable coin is it helps you to normalize the market volatility. I mean, if the cryptos are going to come down, you can just convert them into stable coins, right? Because it is pegged, and it is pegged with the dollar. But as long as you're asking about the profit, so look at the other section, which is commodity backed stable coin. A commodity backed stable coin is backed by gold. So tomorrow, if the value of the gold appreciates, that particular, like the DIGIX, DIGIX, it's a commodity backed stable coin. Tomorrow, the value of gold goes up, the value of your stable coin goes up. Plus, it is digital, so you don't really have to store gold in your physical safe or in your physical locker. So that saves a lot of storage cost for you, right? That's why the stable coins are used. This is something which a lot of people are not really into, because the whole crypto mania has surrounded everyone. But then we are more than happy to discuss it with you. Again, we don't provide you these coins to invest into, but then more than happy to consult. Now, next thing, this is some statistics before we move on to the different ways of investing in cryptos, the final section. The institutional trading volume on Coinbase, which is the most important exchange, if you see Q1 2018, the institutional trading volume, which is highlighted with a blue, it has moved from $56 billion to $89 billion by the end of the Q4, which means massive investments from the institutions. One question is there, that if backed by a commodity, how does it help? Say gold is 1800, so you would use 1800 BUSD, but how would the stable coin gain value? So you actually have to buy a stable coin whose value depends on the prices of gold. So I would try in my platform, there is no such stable coin which I can provide. But if I get the time, I'll definitely show you the pricing of those. So look in something into DIGIX. It is one of the stable coins. You see the value, and then we'll definitely discuss over it that how you can buy a stable coin through using these crypto exchanges. Now, this is 2021 year of cryptocurrency. This was again till May 4. When we saw Dogecoin going up by 7,000%, but then this was April to May. If you see January to May, Dogecoin went up by 14,000%, a number which is hilarious, but then it is true. And then other cryptos like Maker, Ethereum, Dash, Litecoin, Bitcoin moving to similar levels, right? And this is the data till May. So definitely a lot has changed into June and July. Markets crashed, and we saw a lot of other cryptos gaining momentum soon, which we are going to discuss about. And this is the performance of major cryptos since Bitcoin hit its all-time high. Most of the cryptos after that has come down. This is the most important, one of the most important things. Take a picture if you want to. And anyways, if you talk to your relationship managers, they will send you this PDF. We created this. In the past, every time when cryptos have declined, so if you see the right column first, Bitcoin 2021 high $64,872. And when this chart was prepared, it was $39,000, and it went to 29,000 also on in the next 2 days. So that decline went from the recent high around 40%, 45%. Ethereum went down by 37%. Bitcoin Cash went down by 55%. Now come to the left chart. What the left chart shows, the major correction from all-time high over the past 5 years, which means, and hear me out, this is the chart which shows you that every time when Bitcoin reaches all-time high and falls, after it falls, within how much time and within how much percentage it recovers back. So we try to make a backtesting data out of it, try to understand that what has, if there is a pattern as such. And what we understood was, if we see from 2017, in 14 days, when Bitcoin reached to $1,326, that was the highest, and it went down by 33%. Within 14 days, we saw, so from 10th March to 24th March, we saw a decline of 33%. And then we saw a rise of 495% in the very next month. In the 11th June 2017 to 16 July, we saw a fall on Bitcoin around 39% and then a rise of 65%. Same year, 2017, we saw the fall in Bitcoin from its all-time high to 41% down and then recovery by 70%. Again, in 2017, fall of 30% and then recovery of 43%, fall of 84% and recovery of 500%. And then in 2021, from its all-time high, it went down almost first 30% and then recovery of 45%. And then it went down by 54%. And you can see the Bitcoin low, $29,000 it went down, which was a 54% decline. And then when's the new high, or when's the new high date? Technically, it happened between April to June. So July, August could be the months where again starts moving higher. So, but if you see from 29,000, it has already gone to 34, 35,000. So this is something, again, this is in last major 5 years, that whenever Bitcoin has reached to its high and crashed by more than 40% or 35%, it has gained again within the same proportion and sometimes higher than that. So this is some sort of research which you can always do in cryptos and talk to your risk experts, and they can help you out in understanding this. Now, investing in the crypto market, this is the most important part, and I'm sure absolutely we are amazingly on time here. So keep asking more and more questions, and we'll talk about the crypto ideas as well. Now, how do you invest in the cryptos? There are different ways. First of all, let's see. So I'll talk about the advantages of cryptos investing and disadvantages both, and how you can invest into it. First and foremost, and please hear me out, one of the very important segment of this entire session, because I'm going to tell you how you can invest in different ways into cryptos and blockchain areas. First way is e-wallets. Now, e-wallet is the traditional way of investing in crypto. Normally, how you do, there are different exchanges like Coinbase, Kraken, Binance, all different kinds of crypto exchanges. We, as Century, we are not associated with any one of them. I'm just taking random names of different crypto exchanges, not suggesting you anyone, but I'm telling you which is the mode of e-wallet. So there are a lot of such e-wallets and lot of such crypto exchanges. All you have to do is open a crypto account with one of those exchanges and create an electronic wallet, and you can buy your Bitcoin, and that Bitcoin or any cryptocurrency will remain in that e-wallet. So this is a digital wallet with a password, with a recovery password and everything. Advantage, no physical holding, so you're putting everything digital. What is the biggest disadvantage? Write it on the chat. What is the biggest disadvantage of a e-wallet, or for that matter, any digital wallet, or for your digital bank account, digital banking? What is the biggest threat at this moment to your digital assets? Use the chat options, guys. Let's use the chat options. What is the biggest threat to your digital assets at the moment? Your digital banking, digital wallets, digital everything. What is one big problem of going digital? Okay, go ahead, guys. Go ahead. I want everybody to answer this. Everybody to answer this. Okay, that's great. Regulations. But if it is digital, then what's the, like, take it this way. If you have digital banking with any bank, MS Islamic, ADCB, anything, what's the biggest problem? Perfect. Everybody, a lot of you are on the right track. Cyber attacks, brilliant. Cyber threats, absolutely. Cyber threats, hacking. This is a new problem, by the way. And don't think that if you have a crazy password which nobody can even think, you are safe. There are, you will. I did a webinar on investments in cybersecurity last month, and where I highlighted about how many kinds of cyber threats are we facing. There is ransomware, there is malware, there are so many threats. Of lately, a pipeline, a oil pipeline in US called Colonial Pipeline, was the data was hacked, which disrupted the supply of oil for till 5,000 kilometers and increased the price of oil by 4% due to supply disruption. That is what cyber threats or hacking, that is the level of cyber threats and hacking. That's why so many stocks related to cyber security like Palo Alto, Okta, so many of these companies have actually CrowdStrike. So many of such companies have actually, their stock prices have gone high because the cyber security is needed the most at this point of time, because everything is going digital. So that is the problem with e-wallets. The Mt. Gox exchange in 2014 was hacked. So that's one of the important things which you need to remember. Second is by using derivatives. Now, derivatives are these speculative, or I should say derivatives are these replicas, or the classes which the value of which is derived from the actual asset. So how do you do in derivatives? Normally, platforms like ours, they will provide you these derivatives to trade in, basically in a form of small contracts, CFDs. So today, if you want to buy a Bitcoin, when you are, okay, if someone don't know about, okay, if you can specify your question, I think I didn't understand the question. Yeah, so derivatives are mostly in the form of CFDs, and CFDs are these contracts. How a CFD would work, how a crypto CFD works, very simple. Let me give you a live example, and I hope that it is clear. Let's say I tell you that I am the broker and this is a Bitcoin CFD, which means today if the value of Bitcoin right here is $35,000 in every crypto exchange. Second. Right here, $35,000. And I say this is a Bitcoin contract which I'm going to give you. Okay, you take this and keep it with you and come whenever you want to sell it. Now, when you come back to me to sell this, and I see the current value of Bitcoin 37,000. Oh, okay. So I gave him for 35,000 and he's coming back and he wants to sell it for 37. So I take this back with me and give you $2,000 profit, right? This is how a contract for difference works. And what is the difference here? The contract for difference, that I give you $2,000 difference, buying and the selling. So whenever you come and you buy a cryptocurrency for $35,000, I don't take entire 35,000 from you. I just take a percentage or a margin, say 10% of the total value, and I keep it with myself and write it on your name. That let's say Mr. Yogesh here has bought $35,000 worth one Bitcoin, and I have kept 10% of the total value. And whenever he comes back to sell, I will give him this 10%, And on the top of it, if it's a profit, I will give him. If it is a loss, I'll deduct. And I write it this in the contract. And this thing, which I am doing physically right now, you can do it online using online trading platforms, something which I can explain it to you right away while switching on my screen. Then there is a way you can invest in cryptos is through stocks. Now, stocks, which means there are a lot of such companies. Do you know companies like Louis Vuitton, Walmart, Volvo, uh, Oracle? These kind of companies have actually developed their blockchain system, and they are using. So Walmart is using Amazon's blockchain system. They have collaborated with Amazon to ensure the safety of the food and beverage products. Louis Vuitton has used blockchain to make sure that the products they are manufacturing are authentic and the supplies are authentic. Similarly, there are a lot of companies which are using blockchain for very specific purposes. And that's why those companies, those stocks also get a very good momentum. Like Amazon is developing its blockchain, the stock has gone up. There are so many companies which are developing, working on the blockchain as a technology, and their stocks are higher. So if you think cryptos is too risky, blockchain is the technology behind cryptos. Okay, so you can always invest into blockchain and not in a specific crypto. Tell me one thing and use your chat options. I'll give you a very simple example. And you can write a yes or no. Would you invest into internet as a technology, or would you invest in Cisco as a company? If you had a chance that this is a technology which is called internet and this is a stock which is called Cisco, what would you like to invest in? Internet or Cisco? Use your chat options. Give me your answers. I just want to see. If you get an option to invest into internet or Cisco, what would you invest into? Okay, that's absolutely amazing. I have mixed answers and I really want to see. Okay, so somebody said internet, Cisco as a company, Cisco, both internet, Cisco. I really love that it's a mixed reaction, because that actually tells us how different people can be when it comes to investment choices. See, just see a bigger picture. Internet is a technology, right? So if internet is a technology, which means you're investing into the technology, a technology can have many, many applications, right? The same internet can be used for search engines, can be used to prevent cyber threats, can be used to create blockchains, can be used to create like everything. Like right now, I have phone, we are communicating, it's all internet, right? So if you put money into a technology, that is one thing. There's this valuable suggestion that technology might change. Today it's internet, tomorrow it could be something else. But if we see it from that point of view, Cisco as a product. So just because internet exists, you will not invest in Cisco. And just because Cisco is an internet-based company, you will not invest in Cisco, right? So you have to find out the bigger picture of it. If you think cryptocurrency as a product is riskier, look into the blockchain. It is still developing. And it is a very important thing. So there's an incident which I was reading about, that one of the companies, before internet was introduced, there was a company which was providing search engine solutions, or search solution like what Google does right now. There was a company which was doing this before internet was there, and there was a merger of this company, and a company paid extremely high price to acquire it. But then internet came in, and all of a sudden the search engines became very popular. So that company was not valuable anymore because their technology was obsolete and it was updated. So yes, there is always a risk of technology being obsolete, but something as sophisticated as blockchain, which is now in the beginning, I would say that if I had to put my money into a crypto or a blockchain, I would be more inclined towards a technology rather than a product. And see, Bitcoin or a crypto promotes anonymity. Blockchain promotes transparency. So it's a slight deviation from the product with its technology. So yeah, I mean, there are ways that you can invest in, into blockchain related stocks. Even if the cryptos continue to go better, those companies with blockchain also continues to flourish. So that way you can diversify. Last but not the least, ETFs and indices. There is something called a crypto index, which I'm going to show you. So rather than taking exposure in one particular crypto, you can take exposure in an index which is already allocating your money into different cryptos, right? I'm going to show you all of this. Now, this is about investment options. What are the advantages and what are the risks? Let me tell you the advantages before we move on to the risk, because that is really important. See, first thing is, I think one very good advantage of crypto is that it is not correlated. Hear me out. I know. I mean, there are. So I'm covering both risk and advantages both into it. So not that I'm picking any side, but I'm just saying that crypto is not related to any specific asset class. It is not related to dollar. It is not related to gold or stocks. I'm not talking about stable coins. I'm talking about crypto as in general. I mean, if you talk about Monero or if you talk about Bitcoin or Ethereum, they don't move in correlation with dollar or gold or central bank decisions or stock markets or anything like that. So it can be your one of those alternative investment moves. If you have a one-on-one session with me, I'll show you the application. If you add crypto into your portfolio, uh, how much the beta of the portfolio changes. Because now this is something which is really amazingly interesting to understand. Beta tells you about the sensitivity of your portfolio to the market. If I say the beta of this product is 0.5, which means if the market goes up by 2%, this goes up by 1%. If market falls down by 10%, this falls down by 5%. So to understand that how much risk a asset class will bring in your portfolio, you start calculating the beta of that particular portfolio. And I'll show you the examples where when we include cryptos in some of the benchmark portfolios in last few years, the beta does not increases by much, but the returns do. Again, as I said, this is a very popular opinion and open to debate and argument. So it's not something which is rock solid. But yes, I mean, it's a hit and try. But yeah, cryptos are not related to any asset class. So that can be one of your alternative. Basically, yeah, not putting all the eggs in one basket and you have different choices, right? And as I said again, alternative investment. So while you invest in commodities and currencies and stocks and indices and ETFs and thematic investing, a lot of things, this could be one of those things. You can invest into a crypto index or a crypto related stock, any one of this. So that is one advantage, that it is an alternative form of investment, not connected to anyone. Then again, trending. So a favorable forecast, right? If the trend begins, then you have seen that crypto continues to go higher and higher. So sometimes if you're in the trending market, you can take advantage of the momentum. Now comes the risk part. And again, obviously risks are way more higher than rewards. And that's my primary point, that why I am doing a session to highlight the risk part. Volatile. Cryptos are incredibly volatile, and it fluctuates a lot. So one advice to all these college students, I am sure there are a lot of college students in this session, because especially the new generation is very fascinated by the world of cryptos. And let me give you this advice. It's a very volatile asset class, and it is not regulated. Anything which is not regulated it's a double-edged sword. It could be a favorite, it could be trending, but if it is not regulated, then it could be the end of it. Because you saw what happened when China banned the cryptos. The cryptos just crashed. So unless it becomes really regulated, I mean, the day it becomes regulated, it might just fly. But if it doesn't, then it might just crash. So you need to be very careful, because it's not regulated. Um, there will be a specific section about the regulation just after this slide, to tell you that in one country it has been taken. Hackable, of course, it's a digital asset, it's hackable. Liquidity issues, sometimes the brokers don't have enough liquidity. Price gap, there are a lot of price gaps, because there is a weekend trading in Saturday, Sunday. A lot of CFD brokers, they don't provide weekend trading, and then markets open at a gap. And if you have put a stop loss, it will not take the stop loss that time, because markets have gone down at gap. Cost impact, charges may be higher. So when you look at, there's a holding cost for CFD providers. Even if you use crypto exchanges, there is a transaction cost when you do a dollar to dirham transaction. When you buy a crypto, there's a buying selling difference also, which is a lot in a lot of exchanges. So a cost impact is also something which you have to see. This is what I want to talk about, and this has been in news. El Salvador has become the first country to adopt Bitcoin as legal tender after passing the law. And the lawmakers in the Central American countries, Congress voted by a supermajority in favor of the Bitcoin law. So basically, it is accepted in El Salvador. Now, this is one of those news that, a beginning somewhere could lead to somewhere. So there are a lot of things. Let me put it this way. There are a lot of things we know about cryptos, and there are a lot of things that we know that we don't know. And then there are a lot of things that we don't know that we don't know. And this is called something, it's a very interesting concept called unknowing, or knowing the unknowns, or unknowing the unknowns. That those things about cryptos that we don't know, which exist. So you have to be very careful about these knowing the unknowns, and that is something which you have to keep in mind. Top 10, or I would say top 8 cryptos actually to watch out for. I was checking a lot of cryptos, and there are, as I said, there are 7,000 cryptos which exist, and we need to make sure that the ones which are important enough, which are available on the platform, are highlighted. And some of them I don't have it on my platform, but then you will find it in 2 different crypto exchanges. So these are few of them which exist, and I'll take you to the live platform after this. This is the last slide, and then I'll take you to the live platform and show you one really good strategy. Don't leave in the next 10-15 minutes. Now, these cryptos, what we are looking at, the very first is Bitcoin Cash. And Bitcoin Cash, it is a part of Bitcoin. Okay, to explain more about Bitcoin Cash, I have to get into the mining process, which is not really the part of this topic. But Bitcoin Cash is a part of Bitcoin, and it still has a long way to go to reach its true potential, and that kind of makes it, this around this time a really decent time to buy, because markets have crashed also. And Bitcoin Cash, it kind of raised from the ashes of the Bitcoin's blockchain shortcomings. And the people who are actually supporting the Bitcoin Cash, they believe that Bitcoin has swayed away from its original purpose and has taken out so many, unnecessary features. So the Bitcoin Cash is supposed to be doing what Bitcoin originally set out to do. And when you compare to the Bitcoin, obviously Bitcoin Cash is very cheaper. The transaction fee is cheaper. The denomination is very smaller. So right now it is again trading at a very smaller value, and I'll take you to the live platform to show it. So Bitcoin Cash is one of the favorites right now, which people are looking into. You can note it down. And again, as I said, whatever I'll be saying here today, it should not be taken as a recommendation or a suggestion. Please talk to your risk experts before you invest into any of these cryptos. Okay, please look at your risk tolerance before you do this. There's a question that how Century is playing the role in the crypto if not associated with any exchange. So we are providing you only CFD based trading or future based trading. We are not providing you a crypto exchange. These are CFDs, and the liquidity of CFDs is different from the liquidity of the actual crypto. So it's a different ballgame altogether. Basically, what you have to see is you can use a CFD platform to buy and keep. You will pay holding cost on buy, but if you short sell and hedge your risk, so there is a popular concept called short selling. I'll tell you right away what it is. You can hedge your portfolio. If you have buy positions on cryptos, you can short sell it on CFD platforms and earn an interest over it. That's something really good. I'll show you right away. Second crypto to watch is Ethereum. Now, Ethereum, at this point, a lot of investors, they're saying that nothing can go wrong with Ethereum at this moment. It's like silver equivalent of cryptos. First major crypto project to introduce smart contracts. It's one of these like second largest crypto as per the market cap, and second most liquid crypto after Bitcoin. So this is something, again, if you want to buy or sell Ethereum, there is no liquidity issue, something which cryptos always fear of. So it is second largest after Bitcoin. So it is at the moment really, really very liquid. And again, I'll tell you, something which is really good about a lot of NFT, non-fungible token-based platforms are actually based on Ethereum. So that has also given a lot of weightage to the Ethereum. So none of the cryptos I'm talking about is regulated. None of these cryptos, because that's the problem, right? The problem with cryptos, it's not regulated. I mean, there are crypto exchanges, but those exchanges are also, I mean, tomorrow if uh, Coinbase goes bankrupt, it's a possibility. If Binance goes bankrupt, it's a possibility. I mean, Kraken goes bankrupt, it can happen, and nobody's going to check on these exchanges. So the regulation is that tomorrow, if let's say Bank of America goes bankrupt, so there is a central bank, Federal Reserve, which is regulating Bank of America, so they will take care of the client assets. But if Kraken or Coinbase they go liquidated, then there's no regulation. So that's the problem with the cryptos. It's not regulated, right? That's what makes it one of the most riskiest assets. Again, what other crypto which is being watched a lot is Tron. And again, guys, Tron, it's something really unique about Tron. It has this ability to process, you should say, it can process the content sharing to popular domains like Facebook, for example, or YouTube, for example. This Tron is becoming a competition to PayPal. Now, that's the very important thing, because PayPal, everybody knows about PayPal. It was overlooked, like Tron was overlooked by crypto investors for the longest time. But now, when people are very much gravitating towards investing in cryptos which are serving a purpose, now these days investors don't just look at, oh, okay, you know what, Bitcoin, I'm going to buy it. No, nowadays a lot of cryptos are actually serving a purpose. Like Cardano has worked really well in Ethiopia, and using Cardano's blockchain and Cardano software has actually raised a brilliant education system in Ethiopia. So Cardano is sustainable, it is environment friendly, and it is serving a purpose, right? So a lot of investors are now inclining towards those cryptos that serve a purpose. And similarly, Tron is making the news. It is challenging Google Pay, Apple, who are providing the same service but at a higher cost. PayPal provides the same service of digital payment but provides at a higher cost, and Tron is at a lower cost. So a lot of investors are actually inclined towards Tron, and the value, could be getting better. Fourth is Cardano. Now, Cardano, as I said, I gave you a very small brief right now what Cardano has done. And Cardano is one of the largest blockchain networks. Like, it is powered by the POS system, and developers are planning to launch a feature that supports the smart contracts very soon. And this can actually push the prices higher. And Cardano market cap is around $50 billion. So yes, I mean, that is something, and it solves a lot of common problems with the blockchain networks. When you talk about sustainability, you talk about scalability, like it is something which does serve a purpose. So Cardano has also become one of the favorites, followed by a Chainlink. Now, Chainlink, again, it became popular of lately. One of the most unique, and it is one of the first cryptos which is allowing the integration of this off-chain data with an Oracle network. Again, guys, I know this becomes too technological, but then if you have a one-on-one session with me, I'll definitely get into more detail and tell you that why a crypto is and what it is doing, and that is what it is about, right? Basically, this kind of blockchain, it can connect with external data and transactions in a more secured way. So the point I'm trying to focus on, that Chainlink, the transactions which go through Chainlink are much more secure, right? So that is again something which is very crucial for any cryptocurrency. Then followed by Monero, Polygon, and Uniswap. Uniswap, let me tell you about Uniswap. See, Uniswap is again decentralized finance, but this Uniswap is most important because it has the technology which can eliminate the need for a broker in trading. Like, if there is a trader, if there is a buyer and seller, you don't need a broker. That's what the Uniswap technology provides. So this can completely eliminate the need for a middleman, no brokers to conduct the trade. It is buyer and seller, which means the very cost of your trade reduces to marginal. It becomes really profitable for the clients. So Uniswap has actually received a lot of investment from a lot of venture capitals, like basically Andreessen Horowitz. They invested into, so one of those venture capitalists who invested into Twitter, Oculus, like the VR company, those have actually invested into Uniswap also. So this is something, again, guys, which is really important, and it helps you understand that why I have picked these cryptos amongst everything. There's a question that there are 7,000 cryptos. Tomorrow, Century or Me can issue another coin. How it's happening? So basically, cryptos are nothing else but a blockchain network, right? And every crypto, it has to serve a purpose. Like I have a virtual app called Sweatcoin, and Sweatcoin is nothing else. It just counts my steps and rewards me coins. Now, I cannot convert that coins into dollars because that would be just amazing, right? That I walked like 5,000 steps and I get 2 Sweatcoins and convert them into dollars. No, it doesn't get converted to dollars. But then uh, if I walk more and I get sweat coins, I can redeem those sweat coins into some of the marketplaces, like get discounts over some unusual products, like hoodies or drones or technological based products. It's not very popular, but it is one of the. So I'm just giving an example. Every coin serves a purpose these days, and that's why they are becoming more and more popular. Polygon, for example, which I want to tell you, Polygon, what is Polygon doing? Like when so the very easy way is, if I tell you that Ethereum can actually become the internet for blockchain. Like, what is the internet for search engine? It's Google, right? Imagine, I mean, hypothetically, imagine the for blockchain, the internet technology, Ethereum can be that. And how Ethereum can be that? Because Polygon, the cryptocurrency, they can help Ethereum like developers get compatible with blockchain, and Ethereum can become like a multi-chain system, basically like an internet for blockchain. So that is why Polygon is also getting a lot of attention here. Then, last but not the least, we are talking about Monero. And again, guys, Monero is we we have discussed about Monero before as well, and see a lot of things, like there is Monero, there is Stellar, but we should discuss about why investing in Monero. See, one of the fastest growing cryptos again. Monero is very secure, and it has been able to maintain that confidentiality of its coin owners. They have a very top-notch technological system, which makes any transaction very much untraceable. Because all these Monero coins are very identical, can be exchanged, and the privacy of the owners can be so much more secure and much more private. So basically, again, guys, it's a newer cryptocurrency than Bitcoin, Monero, but then it is still competing very favorably. Their protocol, which is the crypto node, it is very different from the Bitcoin protocol. It is very much preferred compared to the Bitcoin because, again, it prioritizes the privacy of the users, right? And it has a very, very competitive market where Monero is competing right now. And again, as I said, it is a booming crypto. So a lot of such things we didn't know before about. Right now, there is too much noise about cryptos. You need to read through the noise, decipher these codes, and understand that if you're investing into crypto, why would you invest into crypto? What is the purpose it serves? Now, with this, let me take you to one strategy. Okay, before I show you the index, and that will be the last 5 minutes of this session. Let me show you this. It's a very, very important strategy and a very good one, actually. I think right here. Yeah, right here. See this. I hope everybody can see this. Please, guys, look at this strategy. Again, now this is something, this is novel. This is new. This is very unusual. Somebody asked me that if I don't want to do, there's a question that if I don't want to trade in blockchains or cryptos, how can I use market neutral strategies? Now look at this. Now we are talking about a strategy where where you buy one crypto and short sell a index. Okay. Let me show you the strategy. And again, this is created by us. So obviously, I'm not recommending you this. I'm telling you, you read through this, talk to your financial consultant, talk to your risk experts, and then only if it makes sense to you, go for it. Now, this is again a highly volatile space, as I said. So there's a lot of disclaimers around there. Let me tell you what is the rationale of this strategy. The very rationale of the strategy is to capture the potential outperformance of Cardano over the rest of the emerging cryptos. How will that happen? We are just trying to see that how the Cardano, which has been outperforming everyone, how can we bank on it? Look at the statistics of the past performance of, if you had bought Cardano and if you had short sell emerging crypto index, okay, what would have been the situation? Now, first, what emerging crypto index is? A crypto index, any index is which tracks a bunch of instruments and gives you an overall outlook. Whether if the index is up, which means most of the cryptos have performed well. If the index is down, which means the set of this crypto has not performed well. So when you invest into an index, you automatically invest into different cryptos. Now, the emerging crypto index, which is available in our platform, this is made of 40% Cardano, 19% Stellar, 9% Monero, 9% EOS, Tron 9%, Neon 7%, Neo 7%, and 5% Dash. Doesn't have Bitcoin or Ethereum. It's an emerging crypto index, right? Now, the reason behind why would you buy Cardano, as I said, I gave you a lot of reasons that why Cardano is, a possibly preferred crypto at this moment, given its sustainability. Cardano is planning a new upgrade called Alonzo, which aims to allow its protocol to completely support smart contract integration with its blockchain. And it's a very big win for the current Cardano holders because it allows them to directly compete with Ethereum. Okay, now that's important. Cardano's platform is built for diverse use cases in education, which I talked about, retail, finance, and healthcare. Ask the Doctor, a global digital health platform that publishes health and wellness content and creates software solutions for healthcare professionals. So, guys, look at this amazing thing. So, Cardano as a crypto has its application in retail, education, and healthcare sector, and that is why, again, a lot of investors are going long for Cardano. And you can at the same time short sell the emerging crypto index because Neo, Monero have had the best performance. Neo is a Chinese-based cheaper alternative to Ethereum. Under immense pressure owing to the ongoing regulatory crackdown in China, it went down. Monero is a privacy-featured crypto, as I just talked about, and it is likely to face further pressure from US regulatory authorities owing to its anonymity feature. Now, guys, understand there are two different schools of thoughts, and I'm really glad that I am sharing this strategy with you. Over here, it is written that Monero can be under scrutiny by the US regulators because of its extreme anonymity, right? So it makes it bad for the regulators, puts more pressure on it, but at the same time, it gains popularity because of its privacy feature. So there are two schools of thoughts. Why we are short selling the emerging index? Because two major components of this, Neo and Monero, they are expected to fall down because China has banned cryptos and Neo is a Chinese crypto. So expected to come down. Monero is too much anonymous, so there might face more pressure. So the value might remain same or might go down. And then again, unlike Cardano, which is designed for multiple sectors, currencies like Lumen or Stellar, they are only aimed for remittance purposes. Ripple is remittance purpose. Dash has a similar profile to Monero just to keep it private. So as you can see that barring Cardano, most of the cryptos in the emerging crypto index has only one specific feature and not multi-purpose. So that's why you buy Cardano, short sell the emerging crypto index, expecting Cardano to outperform the index. So if the Neo and Ripple and others, they go down, you expect to make profit in the falling index. And if Cardano goes up, you expect to make profit in the single position of the Cardano. So it's a two-way trade. It's a pair trade which we have taken. Now, again, if you see right here, look at this, performing during negative return days. Now, this is a performance. Let me zoom this in for you. Look at this. During down days when the rest of the emerging cryptos have trended down, Cardano has outperformed the remaining 6 cryptos 22% of the times. And these days, the average return on Cardano has been minus 1%, whereas the rest of the 6 cryptos have daily returns of minus 4%, which means if you're short on the other index, you are down by 4%, which means you're making a profit. And Cardano, the profit in the short position is higher than the loss in the Cardano. So that's what the pair trade is all about. And we can, again, on a one-on-one session, if you come to the office, I can explain you more that how this works. So guys, basically, this is unusual because this is not something which you see on daily basis in a crypto. Now, let me quickly take you to the live platform where we will see some of the important things. Look at this, guys. I am now showing you the live platform and the things which are available here. There is an all crypto index. Okay, all crypto index is an index which is available here, and you can actually look into all these kind of crypto indices. All crypto index contains all the cryptocurrencies that the broker offers to you. In this case, CMC markets. All the cryptocurrencies which they're offering, you get one index which is tracking all those. So your money is allocated to all these cryptos which you see right now. Then there is a major crypto index platform which tracks the performance of the largest and the most liquid portion of the crypto market, like Bitcoin, Ethereum, Bitcoin Cash, Litecoin, etc. Right? So this is a major crypto index. Then there's the emerging crypto index which I talked about, which has Dash, Neo, Stellar, Tron, Monero, Cardano, all these kind of. And I told you how that each of these individual cryptocurrencies are being focused and talked a lot about. And it is very easy to buy. Like right now, this is a demo account. I have put $1 million in this, but definitely, I mean, you can suit yourself whatever requirement you have. But I'll tell you how a CFD is bought very quickly at the end of the, like this is the end of the session right here. Let me tell you this, how easily you can do this. You look at, say, Cardano right here, click on this, and you look at the buying position. This is the buying price. And let's say you want to do it for $100,000, you write 100,000 in the amount. It calculates 70,000 Cardano, and it tells you that you don't have to, if you want to buy $100,000 worth cryptos, you don't have to give 100,000, you just have to block $50,000 because Cardano has a margin requirement of 50% right here. If you see 50%, which means whatever value of Cardano you will buy from your trading account, only 50% will be blocked and you will get the exposure of $100,000. Click on buy and the trade is executed right there. And if you see from your $1 million, 50,000 is blocked as a margin, rest is available. Go to the account, click on trades, and you will see a Cardano trade right there. Negative 281, this is the notional profit or loss, which will continue to move. Now, good part about the CFD platform is the hacking part. The trading accounts, withdrawals happen in the banks, where the money comes from. And the third-party transfers are not allowed with the broker. So even if you give your password to someone and they hack into your trading account, even if they want to withdraw money, they can't withdraw money into their own account because your bank statement is registered as a withdrawal destination. So a lot of people, they would pay holding cost only to trade through CFDs, buy and hold, which you can easily do, right? So this is again something, guys, you can do it. You can also buy something called blockchain. Sorry, right here. Very easy. Look at this Riot blockchain company right here. Okay, so this is again one company which is working on the blockchain development, and you can buy this stock also. This was at $80 and right now it is at $35, 50% down right now. And cryptos are 50% down right now. So it's your choice whether you want to invest in a crypto or in a stock, which is a blockchain related stock down by 50%. This is the whole point. As far as cryptos are involved, I would tell you Cardano here right now. Look at the chart. Look at the chart, how it has moved. Almost every crypto. There is a good support level at this price right here. You can look at the support and resistance right here. You see how many times, look at this. This is right here, amazing chart right here. Look how many times it bounces back from this place. Here, look at this. Look at this. Look at this right here. This is brilliant. Look at this. Look at this. All these small, this is, I'm looking at a chart right here. Look at this. Every time it has found a support right here. And this is which level it is? 1.02 level. And where is the resistance line here? A bit of technicals to put in. This is right here. This is basically, this could be your one resistance line here. And then this could be another resistance line, which has been broken at this moment, I think. Somewhere around here. See, it's been broken right here. But look at this resistance line from where it mostly books the profit and comes down. Look at this. This one here. This one here. Look at this. Right, which is 1.8, and currently it is at this level. So if it breaks this resistance, definitely 0.4 cents more. But then again, guys, long-term investments, again, a part of your portfolio can be dedicated towards it. So see, this is something which is there. I would always want to do a session on cryptos to make you more aware about what cryptos are, not to tell you, oh, right now is the time, invest. I mean, yes, cryptos are trending, but the whole point of today meeting you guys was to tell you that there are few cryptos which are serving a purpose. If you want to invest into it, pick one of these. Those cryptos which have, which are excelling in privacy or anonymity, or those cryptos which are excelling in sustainability or retail or multi-purpose, like those kind of things. Just don't blindly close your eyes and buy a Bitcoin or Ethereum just for the, just because everybody is doing it. Talk to your financial consultants, talk to us. We'll explain it to you. We'll tell you ETFs. There are a lot of ETFs which are available of blockchain-based ETFs where you can invest into. You can buy CFDs, you can trade, speculate. Ironically, speculation is one of the most normal things which the clients are doing these days in cryptos, because that is the only thing which is more confirmed. Short term is more preferred at this moment than longer term. So yes, that is something which we have seen, right? I think a few questions here. Can we get this demo account? Absolutely, you can. You can get this demo account anytime. You just have to talk to your relationship managers and they will give you a demo account. Another question here is how fast we can buy through live accounts. So when your live account is opened, it's, as I showed you, I just bought Cardano right here. It's a click of a button. To open the live account, it takes 2 days. You just set up your documents and your RMs will help you out. It hardly takes 2 or 3 days. That is there. Another point. Okay. Perfect. So yeah, I think one question is there, that how do you short sell, or what is the percentage I get on short sell? If you short sell Cardano right here, good, that's a good question. If you short sell Cardano, you will receive, if you see here, 13.5% for the year. So if you're taking a short selling position, you receive 13.5%, but the holding cost, or sorry, the interest which you receive, it is calculated on the closing price. So yes, 13.5% for the year is if you short sell it. But if the only risk is if Cardano goes up, then you have a loss. So be very careful. Another question, how can we buy crypto and keep in my account and without having holding charges? If you want to do that, you can use the crypto exchanges like Coinbase and etc. The only risk is the hack, what I was talking about, and the risk of Coinbase or Kraken getting bankrupted and not giving you your money. So that is the risk, but then they will not charge you the holding cost, but that's the risk. So yeah, definitely there is a way that you can buy a crypto and not pay the holding cost if you go through exchanges. If you do go through CFDs, then you have to pay the holding cost. So that is true. Right. So once again, a lot of questions. It was amazing talking to you guys. Before I leave, on behalf of Century Financial, my team and myself, and on behalf of my family, a big vote of thanks to anyone who's connected with medical or healthcare sector first responders, doctors, healthcare professionals, midwives, who are risking out their lives for us here or back home in India. If you are one of those, or if you have relatives who are one of those who are risking out their lives for us, please convey my regards. A big vote of thanks to all of you and to them for risking out their lives. This is something which is a very, very difficult time for all of us. And it's completely unknown that how it's going to end. But anybody risking their life for me or for my family, I would like to convey a lot of thanks and a lot of regards. I really hope good health to all of you and your family members. Please make sure that you are using all the safety precautions, using your mask, using sanitizers, and avoiding any public gatherings, and make sure that we fight Corona the way we should. I'll be available for another one-on-one session anytime. Just talk to your relationship managers and we can discuss further about this. Next week, we'll meet with another one of the great sessions, brilliant sessions about another different topics. And we'll keep doing these sessions every week to make sure that the crowd is aware, they are aware, they know the risk, and they are able to manage their risk. So once again, thank you so much. My name is Yogesh. Please book your one-on-one sessions and we'll be very happy to do these personal sessions with you. Take care. You have a great night.